A liability went up, source of cash. All right, so let's look at our cash flow from operations. Add them up. This, minus this, minus this, plus this, plus this. So 60,743 minus 29,46 equals, minus 77,67 equals, plus 32,78 equals, plus 1035 equals $54,343. So this company generated a profit, add back in the non-cash depreciation, they generated $60,743. They borrowed some money from vendors, they borrowed money from the bank, and they reinvested in accounts receivable and inventory, and they generated positive cash flow from operations of $54,343. Now let's look at cash flow from investing. And that is the change in property, plant, and equipment. That's this cash flow from investing focuses on property, plant, and equipment. And that's ending net fixed assets minus beginning net fixed assets plus depreciation. All right, that's what that is. So ending net fixed assets is 147,115 minus beginning 127,50 equals, it's a positive number. Then we're going to add back depreciation expense plus 21,137, and we get a total of 47,502. Oops. 47,502. That is how much money the company spent on property, plant, and equipment. It's a positive number. It's an increase in an asset. It is a use of cash. So, the company has generated this from operations. They spent this reinvested in the company. They borrowed this, and they generated this from operating the company, and they reinvested this amount of cash flow into property, plant, and equipment. Now let's do cash flow from financing. That's the change in long-term debt, the change in contributed capital, and dividends. Okay? Debt, equity, dividends. Okay? So, long-term debt, the change in long-term debt, right here, 70,150 is ending, minus 60,950 is the beginning. The company borrowed $9,200, and that is a source of cash. They borrowed $9,200. Ending was $9,200 higher than beginning. They borrowed an extra $9,200. The change in contributed capital, right here, $22,000 minus $10,000, that's $12,000. The stockholders kicked in $12,000. Ending contributed capital was $12,000 higher than beginning contributed capital. And then, on the income statement, or at the bottom, it tells us they paid dividends of $1,500. That's always a negative. Okay? So, cash flow from financing is equal to $9,200 plus $12,000 minus $1,500 equals $19,700. Cash flow from financing. Now, the change in cash is equal to cash flow from operations plus or minus cash flow from investing plus or minus cash flow from financing. So, we have $54,343 minus $47,502 equals plus $19,700 equals $26,541. That is the change in cash for the year. That's what we're trying to check. Now, How can we check that to make sure that's right? Well, on the balance sheet, whoops, why'd that turn off? Let's get this. Do not go to sleep, monitor. All right, monitor's back on. So we have cash right here. So, if we did this correct, if we did our cash flow statement correctly, then this number here will be equal to this number minus this number. So we have $40,530 minus $13,990, and we get $26,540. So there was a $1 mistake somewhere. In accounting, we call that immaterial. We don't worry about it. There's a $1 difference there. So we are good to go. Our cash flow number is close enough, within $1, immaterial, and we're good to go. So that's what our balance sheet and cash flow statement look like, and you already got a look at the income statement. So the first 17 questions will require you to do these types of calculations. The next 43 questions, there'll be a tax calculation on there, and then the next, and then 42 concept questions, definitional questions. So study, go over your notes or completed notes, study your homework, pay particular attention to your homework, build yourself a really nice 4-inch by 6-inch study card. You can only handwrite on it and only on one side, but you should, and what can you put on there? Anything. Put anything on there that you want. All right, that should do it. I'm going to post this on Canvas for you. Good luck. See you at the test time. Shalom.